Bighorn law. Insurance companies are denying pandemic claims. All businesses, in one way or another, have been impacted by the COVID-19 pandemic. Many businesses have filed insurance claims on their business interruption policies due to COVID-19 and have been denied. Many of these denials are inappropriate and could constitute what's called bad faith. Those businesses may be able to sue their insurance companies for bad faith and recover the damages that it has caused their businesses. Insurance companies are required to pay covered claims. Now, insurance companies have contractual obligations to pay, again, what are called covered claims. Nevertheless, many companies are choosing to deny covered claims made under the COVID-19 pandemic conditions. When an insured business makes a claim that should be covered under their business interruption insurance, and the insurance company decides to deny that valid claim, that valid covered claim, Nevada law could consider that act to be in what's called bad faith and subject the insurance company to liability in favor of the insured business. So let's talk about this type of coverage. Most business interruption insurance policies have specific language expressing what they are bound to cover and what they are not. Insurance companies are not required to pay business interruption claims for events that are expressly not covered under the terms and wording of the insurance policies. If your business has made a claim under your business interruption insurance and been denied, call Bighorn Law immediately. I want to hear your story. We are helping businesses whose business interruption claims have been wrongfully denied get the compensation that is appropriate for them to receive. We're here to help if you've been denied. Bighorn Law will review your policy once your claim has been denied to determine whether or not that denial is fair or could mean bad faith on the part of the insurance company and potentially entitle you to compensation. Now, business interruption insurance serves to replace two basic things. Now, when a covered event happens and causes a loss, that is where insurance for business interruption coverage can kick in. An event is considered covered if it's included in the policy or not expressly excluded in the language of the policy. Now, each policy is different and needs to be reviewed. Business interruption coverage is usually a part of a business's general insurance policy. Now, business interruption insurance does not cover damage to property like a building damaged in a storm. However, property damage is a separate insurance coverage that may also be included in your business's general insurance policy. Now, there are two main types of losses that are covered under business interruption insurance. First is lost income. Second is expenses. Lost income generally covers income that you would have received but did not because of the covered event that happened and caused the interruption to your business. Now, coverage for extra expenses essentially and generally covers expenses that are new and caused by the covered event that caused the interruption to your business. So for example, an earthquake hits a clothing business and destroys its storefront and warehouse, along with all the clothing inside. When the warehouse collapses, all the clothing becomes destroyed and cannot be sold. Likewise, the business is forced to pay for rent in the building of their storefront, which they cannot use for the next 3 months while it's being fixed. So, accordingly, business interruption coverage may pay for the lost income from not being able to sell those goods, as well as cover extra expenses for, say, a new storefront to then sell the business's goods from. So other examples: hurricane, fire, government shutdown, pandemic, riots. All of these are potential circumstances, depending on your insurance policy, where business interruption coverage may apply. Now, to talk about bad faith. The term insurance bad faith refers to a situation where an insurance company violates what is recognized as the implied covenant of good faith and fair dealing. When insurance companies have a duty to pay on a covered claim and choose not to, that may be what we call bad faith. Now, when a company has been found to have violated the covenant or promise, they then become liable to the insurance policyholder that they have wronged. In other words, the business that they denied the claim from. That business policyholder can then potentially sue them in what's called, again, bad faith, and the damages that the insurance company's bad acts have caused to them, they may be entitled to compensation for. Bighorn Law has been fighting for insurance from the beginning. We have committed ourselves to holding insurance companies responsible for doing the right thing and paying covered claims. If your claim has been denied, contact Bighorn Law immediately. I want to hear your story. I want you to be heard. Bighorn has your back.